So, Bitcoin update. Previous video, I said Bitcoin is gonna revert back, or it's gonna touch its 50-day eventually. When trading, you have to remember that there are time periods. Okay, nothing happens overnight. Nothing happens tomorrow. And nothing happens in 5 minutes. Trading is broken up into time. Okay, 1 minute, 5 minute, 30 minutes, an hour, 3 hours, 6 hours, 24 hours, a day, a week, a year. Okay, so nothing happens overnight. So just because the price is holding does not mean that it's not going to touch the 50-day. It's just momentum. That's all it is. So it pushed from 51 to 52 overnight. Somebody did a lot of buying for no reason, I guess. If you look at the MACD, you can see the descending momentum. So eventually the MACD is going to turn negative like this. And then once it turns negative, you'll have a sell-off. Then the price will bounce around on the 50-day. Usually it'll either hold the 50-day or it'll fall under and then pop back above the 50-day. Either or, it doesn't really matter. But 50-day is usually the actual price to me, and other people that use it as a metric for price. So to me, Bitcoin is only worth 44,000. People are buying it for 52. It'll fall. Everything above 44 for me right now currently is speculation. Everything below 44 is an entry point, unless the averages invert. And if they invert, then that changes. But for right now, my price is 44, right? Averages do change in price. So if you can trade, you would know that. Okay, so averages do change in price. So the 50-day, where you see 44,800, can easily become 46,000. Then the price of Bitcoin is 46,000. That's where you want to enter, right? If the average inverts and goes on a downtrend, then you wait to the death cross, and after the death cross, then you enter. But for the most part, currently the price is 48 or 44.8. And everything else above it is speculation. So you wait for the entry price. When is the entry price? Usually when the momentum is gone. When the MACD momentum is gone, all the buying is gone. Then you have a sell-off. People will buy the dip and push it up. It's basic, a little kid could kind of figure this out. It's not really that hard. RSI still up. And that's basically it. Entry point might be 46,000, between 46.5. But the price is going to come down eventually. Especially with the decline in MACD, those technicals. Now, it's not a definite. Again, it's not a definite that the price is going to touch 46. It might come down to 48, and some support might stop it, like the 20-day might stop it, and then it might bounce off of that. So there are different averages to use, but most people who are experienced traders, they use certain averages because they don't want to enter too early. So Yeah, the 20-day is good, but the 20-day moves too much. The 20-day is not as sound as the 50-day. So, you get in the 20-day and then you end up at the 50-day, So that's why people usually wait for the 50. Some people, that are really patient will wait for the 200-day. And that's when you get the bear market usually. And they'll wait, and that's when they'll make their entry. Now, yeah, you get, a couple bucks in your pocket and you might say, it starts to burn in your pocket and you're like, hey, let me trade. But that's not how people actually trade. People don't make multiple trades during a week, multiple trades during the day, multiple trades during the year. Usually is between 4 to 5 trades. A good trader, you know, unless you're dollar cost averaging, which is completely different. You're just saving. You're just saving basically. That's not trading. You're just saving because if you're dollar cost averaging, you're avoiding the losses. Um, if you buy on the same day every month, so on the first you buy every month, you're avoiding those losses. Eventually, everything will average out over time, and then you hold for the long time, for the long period. Like 5 years, 10 years, blah blah blah. But if you're trading short term, that's between 3 to 6 months usually. Um, People do trade on the minute chart. They do trade on the 5 minute chart, but those people usually lose all their money eventually because you're trading on the 5 minute and you're not looking at the basic technicals, and then because you're not looking at the basic technicals like the MACD, the RSI, the actual price, you're just looking at candlesticks, shadows, and wicks. um, Things happen while you're trading, and you lose a lot of money. You know, so anyways, yeah, we're up. Bumped us up to about 52. The buy-in is about 46.5, 47. Price is still high. It's still overvalued. Should be coming down soon. I don't know. I would give it about 2 weeks, a week, before it starts to come down. And speaking of actual candlesticks, there's no real, well, this one right here, you have a little rejection, but I don't see any rejection from the price with the candlesticks, but that don't really mean anything. Unless you're trading on like the minute charts. All right.